This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled up on Friday as hopes of stronger Chinese demand and a weakening U.S. dollar outweighed concern about a global economic downturn and the impact of interest rate rises on fuel use. To fight inflation, the U.S. Federal Reserve is trying to slow the economy and will keep raising its short-term rate target, Federal Reserve Bank of Philadelphia President Patrick Harker said on Thursday in comments that weighed on oil. But crude is gaining support from a looming European Union ban on Russian oil, as well as the recent 2 million barrels of oil per day output cut agreed by OPEC+.
The Biden administration's plan to continue releasing the Strategic Petroleum Reserves, SPR, as appropriate, to bring down retail rates poses limited downside from current crude price levels, Goldman Sachs said in a note dated Thursday. President Joe Biden on Wednesday said the United States will sell 15 million barrels, MB, from the nation's SPR by year-end, intended to prevent oil price spikes in the wake of a decision by OPEC plus oil-producing nations to cut oil production. The announcement, however, failed to ease oil prices, as official U.S. data showed the SPR last week dropped to their lowest since mid-1984, while commercial oil stocks fell unexpectedly.
Moving on to the top news in the energy sector.
Russia can access enough tankers to ship most of its oil beyond the reach of a new G7 price cap, industry players and a U.S. official told Reuters, underscoring the limits of the most ambitious plan yet to curb Moscow's wartime revenue. The group of 7 countries agreed last month to cap Russian oil sales at an enforced low price by December 5 but faced consternation from main players in the global oil industry who feared the move could paralyze the trade worldwide. Months of discussions between the United States and those insurance, trading and shipping firms have mollified concerns on their exposure to sanctions, but all parties now realize Russia can largely skirt the plan with their own ships and services.
Saudi Arabia's energy minister Prince Abdulaziz bin Salman and the director of China's National Energy Administration Zhang Jianhua on Friday said they would strengthen their ties in the energy sector, the Saudi state news agency SPA reported. The officials spoke in a teleconference call and stressed the importance of stable long-term supplies to crude oil markets, SPA said. The Saudi minister reaffirmed earlier on Friday from New Delhi that OPEC Plus is doing the right job to ensure stable and sustainable oil markets. Next, we have the top news in metal markets. Aluminium prices were set to end the week around 4% lower as fears of rapid U.S. interest rate hikes dampened the outlook for economic growth and metals demand. Prices, however, rose on Friday after the Wall Street Journal reported that some Fed officials may wish to slow the pace of rate increases soon, lifting stock markets and weakening the dollar. Earlier in the day, U.S. 10-year bond yields hit their highest since 2007 and China's yuan fell to its weakest against the dollar since 2008, making dollar-priced metals costlier for buyers in the biggest metals-consuming country.
Gold prices were on track to gain for the week, rising more than 1% on Friday as the dollar weakened amid reports of a potential debate amongst the U.S. Federal Reserve officials about the pace of rate hikes. Spot gold was up 1.5% at $1,652.21 per ounce by 2:06 p.m. Eastern Time, 18:06 GMT. U.S. gold futures settled up 1.2% to $1,656.30. The WSJ reported that Fed officials were barreling toward another interest rate rise of 0.75 percentage point in November, while some have begun signaling the desire to slow down the pace of increases soon.
We will now look at the top news in the agricultural sector.
India's recent curbs on rice exports could trigger a rally in global prices after more than a decade of stability, traders said, as New Delhi's protectionist move coincides with falling output in other major producers and rising global demand. Uneven monsoon rains hit rice planting in India, prompting the export restrictions in September, and floods have cut output in Pakistan even as consumption has grown in top importers such as Bangladesh and the Philippines. That's why forecasters are saying global demand will outstrip production in 2022-23. This is bad for Asian and African countries that use rice as a staple, some of which import as much as 60% of their supply.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.